You used to call me on my soul phone. The market is absolutely rallying, and this is after crushing losses week over week for what feels like an eternity. And I'm here to tell you not to FOMO into this rally. Now, what happens during bear markets is that even after what feels like the most punishing downside, there is a very convincing rally, and that's what's happening right now. But there is absolutely no sign of a macro bottom, because remember, none of this happened due to internal crypto cyclical forces. This was almost entirely due to external forces and the Federal Reserve. And the entire macro climate is looking more and more dismal by the minute, not less. So remember, the forces that created this entire crypto crash are still very much alive and well. And if anything, consumer faith and retail inflows have only been damaged. So do not get suckered into these bear market rallies, and remember that patience is a virtue. We're going to be walking you through the entire market right now because there's been so much that has happened today. And I want you to know that where we're at right now is starting to spell a much more clear picture, in my opinion, of where the bottom is, how long this is going to last, and what the optimistic scenario looks like, which I'll be laying out for you today because I'm a relentless optimist and it's gotten me through the last bear market. It's going to get me through this one, and I'll get you through it with me. So if you're excited for that, destroy that like button and let's dive in, because the world of crypto is just as crazy and fascinating as it has ever been, despite this wild volatility. So as you can see, some coins have been rallying super hard. Solana, for example, up 50% from its ultimate lows just a few days ago. Still don't think the 12 to 24 month crypto lows are in, says Jason Choi. Reminds me of 2018 bear market rallies when we revert when everyone is convinced otherwise. Yes, this is exactly what I'm talking about. It seduces you in, and we're going to talk a lot about why bear market rallies are so convincing and how they can be so crushing. I personally got suckered into almost every bear market rally in 2018. And this is where bear markets become ultimate teachers, because that pain of the suffering through 2018 is something that never really left me. It stayed with me forever. And just like the people who have lived through the dot-com bubble crisis, people who have lived through the great financial crisis, going through these epic bear market crashes, these macroeconomic downturns, those are experiences that stay with you for a lifetime and forever make you more conservative risk managers and traders. And this is why these types of moments are really important learning experiences. Now, is there a percentage chance we just go up to the moon? Maybe, but I highly, highly doubt that in this current macro condition. We'll explain why. Now, to be clear, it's been pretty dull in crypto land. Not a lot of big movements except for crushing liquidations across centralized DeFi and then, of course, Three Arrows Capital, which we'll dive into in just a second here. But anyway, as Wifey says here, when market is dull, read this thread. Effectively, the TLDR here is in a bull market, dullness is generally followed by advances, upward ticks in price. In a bear market, dullness is usually followed by declines in price. And so you can think of when it gets boring, that's when there's going to be another move. However, in a bull market, that move is up. In a bear market, that move is down. Right now, we've had quite a bit of dullness, which means that there could be another move down. Remember, this was tweeted on June 22nd. So this was before this rally really took off in a major way. So just understand that this is generally referring to the bear market as a whole, knowing that the overall momentum of the market is down, and you should be respectful of that. Now, we have a great tweet here that I want to read out, just echoing more of this sentiment. Bears are smart creatures. Now, as Pentoshi says, and I really love Pentoshi, honestly one of the best follows on crypto Twitter, bears are smart creatures. They know about sustainable farming. If they hunt the bull too much, there is nothing left. Let them graze a few weeks and become plump cows before they lead them back to the slaughter. And as Pentoshi says here above, cattle are being corralled, but the financial butchering few months away. Cow must be convinced macro bottom is in to extract max value. Bear brings cow to brink of death. Knows cow will try to make it back in one trade. Bear market rallies go higher than one thinks, and cow bag shrinks. That's the reality, is that effectively these bear market rallies get you off the sidelines, get you to deploy more capital, and then boom, another leg down. Same thing over and over again. But the thing is, if it happens over a slow enough time period, it can start to feel really genuine. So it's important to understand and have a thesis as to what the factors are that could mark the bottom and could actually lead to a sustainable sustainable recovery of the market. Because unless there's a sustainable recovery of the market, there's no reason to be jumping in unless you're planning to swing trade over just a few days, which in my opinion is raw gambling in a bear market, to bet on the counter trend for just a few hours or days, knowing that at any time you could get an absolute death candle down 20-30% as we've seen. This is the nature of crypto bull markets. It's the nature of all markets. Look at the traditional stock market and how many stocks have an absolutely cataclysmic big double-digit losses in a single daily trading period. It's wild to see. So just know, we're in historic bearish times, and until we get some more clear signals out of the Fed and the macro economy, a real sustainable recovery does not look super likely. So don't get suckered in too much into these bear market rallies, as I speak from experience that these things can be really, really damning. Now, does that mean you should be buying absolutely nothing? No. I've started DCAing little bits into Bitcoin and Ethereum, coins that I think have an amazing future, but I'm not unleashing the Kraken yet. And I'll tell you exactly why I haven't started buying as much as I had originally planned. And it has to do with the speed of the descent and how we got here, because we didn't get here the normal way. So let me explain why we're rallying and why I'm not deploying yet. So how did we get here down to this next leg? Well, guess what? Luna and UST set off a chain reaction of events that started to expose some of the biggest baddies in the entire crypto ecosystem. And one of those irresponsible players that we had no idea how irresponsible they were is apparently Suzu, Kyle Davies, and 3 Arrows. I'm going to drop a lot of allegedlys here. This is all alleged. I don't know the truth or fiction yet. This is secondary research, so I'm just telling you guys what I'm observing. Anyway, so here's what the word on the street is. Remember, Fat Man Terra was the one who was exposing a lot of Do Kwon's random business, alleging that he had embezzled a ton of money, all that kind of stuff. All right, so let's go into this. Suzu is now back in Singapore, and he's working with a law firm specializing in white-collar crime. He really doesn't want to go to prison. All his creditors are after him. But how did he get to this point? Where did 3AC go wrong, and what should you do next? Now, switching over to reader mode here. So the degen trade. 3 Arrows Capital had a massive margin long on Bitcoin with a liquidation price of around $24,000. They kept it a secret, even from their partners, because they didn't think it would realistically go that low. Terra, Luna Foundation Guard, and market conditions sent Bitcoin plunging. Okay, so let's discuss each tweet here, because not everyone might be following, all right? 3 Arrows essentially had a leverage long, saying they were betting on Bitcoin to go up from 24K, and they thought that was a point that would never be revisited because it was so close to the prior all-time high. If you look at the prior bear cycle, where a Bitcoin went down from 20K down to 3K, well, it never actually really came close to that prior all-time high of 1,100. This is effectively like longing Bitcoin at, 1,500 or 2K on the last cycle. You're thinking, well, guess what? It's never really going to revisit these lows, and it didn't on the last cycle. But because of Luna UST and all the leverage, remember, we talked a lot about hidden leverage in the ecosystem and how unbelievably messed up it can be for price action. Well, because of that leverage, we've seen the degen trade backfire. And as soon as Bitcoin broke below 24K, I don't know if you guys remember, but it was like rocket fuel back under the prior all-time high of 20K. And that was something I did not expect. I expected some major bounces at 20K. But when there's all this forced selling from people like 3 Arrows Capital, it can accelerate the downside. Same with the forced selling from the unwind of Luna UST, which was literally the domino that kicked off all the rest of this pain and suffering. So just know that kind of forced selling was something that I had not factored into this bear market. It wasn't the way that the last bear market worked at all. And so understanding that this is a new ball game and that leverage really is the root of all evil, and certainly the root of this crushing bear market, where, to be honest, I expected a bottom for Bitcoin in the 20s. Now I expect a bottom for Bitcoin in the teens. And that is because of the speed we've gotten here, knowing that the macro climate has not changed. Let's get back into this tweet thread. So margin calls. Counterparties tried contacting 3 Arrows Capital for collateral, but they ghosted everyone. They just stopped talking to everyone. They were forced to liquidate 3 Arrows Capital's position, causing Bitcoin to drop further from 24K to 20K. This move kicked off a spiral of cascades and bank runs for several parties. The painful losses. After the first default, Hidden Road, losses were exacerbated. Genesis apparently faces high 9-figure losses and will sue. BlockFi and BitMEX had some exposure, but not much. Other minorly affected parties include Cumberland Galaxy and Deribit. I can fix her, in quotes. During the collapse, in desperate bid for liquidity, 3 Arrows Capital solicited Bitcoin from whales and trading firms. They lied about the fund's assets under management, didn't disclose the degen long. Remember this degen long up here, the 24K long that was effectively effectively the straw that would break the camel's back, where people would need to know, hey, if I'm lending you money, what are the liabilities? What are the risks? And if the risk is, yeah, the sky's gonna fall, well, guess what? That's probably a massive risk that you need to disclose. And again, this gets to the question of what was illegal about what they did. So what did they do? They decided to solicit this Bitcoin from people. They didn't disclose their assets under management issues, and they didn't disclose this long that had a effective existential risk for their hedge fund. It promised an estimated 20% yield on whatever they got, and apparently most funds smelt a rat. Of course, 20% in this climate is utterly insane to promise, and it smells like Luna UST continued. Again, apparently this is what they've been doing, is promising 10% year over year returns and getting wild amounts of loans from everybody. So this is where we get to some big damage, right? Voyager apparently gave $700 million to Three Arrows Capital uncollateralized, meaning they just gave it to them with no ability to use capital as a recourse or something to protect their initial loan. They used interest payments and provided retail forward-facing yield through their platform and skimmed a cut for themselves. Upon learning of this revelation, Voyager fell over 50% when people found out how degenerate Voyager had been in loaning this money and using the yield to pay off their clients. This is Ponzerific, at least, if not a full-on Ponzu. On a side note, I'm very excited for the future where people build real products with real demand. And again, I believe strongly, even more so today that this comes through gaming, but more on that at the end of the episode. The damage report. Most of 3AC's remaining assets are in the form of illiquid equity investments in things like Deribit and Starkware. Their L1 tokens crashed heavily, so this is just an estimate. They estimate about $400 million in assets with $2 billion in debts, so essentially $1.6 billion in bad debt. Absolute insanity. The next move will be lawsuits, there will be liquidations, creditors will come for everything they possibly can, and effectively, they will try to stay out of prison. Most creditors will never be paid because there simply isn't enough money to go around. Around $1.6 billion is gone, money that went to BTC miners who dumped their position, and large funds with open shorts, perhaps even a fund who is extending bailouts right now. So as Fat Man Terra says, in the face of this knowledge, what should you do? There is one more crucial, actionable piece of advice. Pull all your money out of CDFI like BlockFi, Voyager, Nexo. For the time being, it's not worth the risk. Withdraw it all into your personal ledger. I would say that you should do that for actual centralized exchanges too. Not so worried about Binance and Coinbase and FTX. The reality is you should not have your coins on exchanges right now. You should not have your coins with custodians at all right now. It's far too risky. Just get your coins, put them on your ledger, sit on your hands, and wait. As Chris Bernisky says, I guess I thought they had more dry powder and less leverage, but the lesson still stands. No one is the source. No one is the size. The market alone represents those two things. And this is definitely something where we got lulled into a sense of sort of false security by the wild bull tweeting of Suzu, the wild ego. And it shows how convincing a strongman leader, an egotistical leader can be in the crypto space as they get perceived as visionaries instead of, thoughtful market participants. The reality is that they were being quite degenerate, at least it seems, based on the information available. They were being extremely degenerate, and their success was largely an illusion. And as soon as the music stopped on Solana, Luna, and AVAX, well, the gig started to slowly unwind, and they were not prepared for that. Obviously, the news that a big counterparty, FTX, is starting to bail people out like Voyager and offering them lines of credit like they did with BlockFi, the reality is that this is not in and of itself able to save the market, and that the deleveraging has just started. Like, this is a domino that we don't know how many dominoes will be set off. So this is where it really pays to be patient. This is where bears can really suck the bulls into thinking that the worst is over, that we've had our flash crash, we've making our V bottom, and we're gonna now recover. So just understand these processes take time, and patience is truly a virtue here. You're not going to look back and be like, I needed to buy the last week of June in 2022 instead of July or August. I don't think the market's going to move that fast to the upside and that sustainably. So let's talk about this all at the end. So the point here is just don't FOMO here. Don't get emotional. There's absolutely no reason to. However, I do believe we're going to start getting generational buy opportunities as soon as we start seeing really the extent of the ramifications. And we haven't really seen where the regulatory aspect is going to fall here, but we know that something is coming here, and that might spark fears and yet another leg down, because this time the regulators have real teeth behind their claims that crypto needs rules of the road. However, just like I've said before, regulation is is bullish. As Mr. Wonderful says, this will bring trillions of dollars overnight into the market. And while that might be a slight exaggeration, I believe it to be true. Once there's rules of the road, big market participants can come in and start playing in the crypto waters. There will even be a case for government bailouts for crypto if the ecosystem gets big enough on the back of a regulated ecosystem. Now, of course, a lot of people will scream foul about regulators because we're all scared they're going to do it wrong, but I remain eternally optimistic that most countries want that crypto money and that crypto innovation to happen within their borders. And so there will, in my opinion, be a path towards sensible regulation. And in my opinion, it's ultimately very bullish for the entire industry. So we just need to understand that this process and a regulatory crash is the ultimate fake out. I tweeted about this a few months ago, and I still believe it to be true. However, my targets went from about the prior all-time high to a little bit lower. And that's because of the speed at which this leverage crash has happened. We've never seen anything like this, or at least I haven't. And we've seen market participants we never expected to go completely insolvent overnight just disappear on us. Three Arrows Capital, Luna UST, Celsius, Voyager, and the list goes on. What's important to realize is that these are forced sells that have unnaturally sped up the crypto crash. And so we're going to see the extent of damage that we shouldn't have expected to see without that. Understanding leverage is absolutely critical here, but it also brings up a really important point. DeFi literally broke. It broke like a twig. Not DeFi 1.0 like Compound and Aave, but DeFi 2.0, the sexy DeFi that everyone wanted to get their hands on. That fixed rate, fixed yield, guaranteed returns DeFi. Yep, anything fixed rate, guaranteed, anchored in US dollars is a fugazi. That's a fair enough thing to say at this point, that anything promising reliable returns in stable coins should be looked at with an extremely sus raised eyebrow. So what's left here? And again, it's not going to surprise you my stance, because I've been of the position that contagious products and applications are what takes crypto mainstream. And I've also been of the position that those products are going to be video games. So once again, the sort of clearing of the herd on DeFi and most likely imminent legislation around stablecoins and DeFi will force an even more exciting climate around NFTs and specifically gaming. I can tell you, I was just at NFT NYC having a bunch of meetings, and the climate out there around gaming is reaching a fever pitch. This is without a doubt the future of Web3. And to me, if it was possible, it makes me even more excited for the future of the projects that I'm working on. Imposters, the super farm ecosystem, the marketplace tech, all of the things that my team and other teams have been pouring their hearts and souls into. And I believe that this is the movement that leads Web3 to a sustainable future, to user growth, and to models that actually make sense and are built upon intrinsic value. So I remain eternally optimistic that we'll get some amazing buy opportunities. But the reality is that until we see a sustainable pivot in the macro conditions that allow for some kind of growth in risk assets or innovation assets, I wouldn't be betting the farm yet or spending all my money, especially chasing rallies. Do not chase rallies in this climate. I sincerely hope this helps you. Again, keeping it very simple. More users equals more value. What do users want? What are digital products that users actually care about buying? Ask yourself these questions about where users are living in fully digital native environments and what are the products and services that they would pay for in fiat, and then do some translations here. And if you're looking at it the way I am, it's pretty hard to avoid that gaming and the metaverse are the absolute obvious choices for the real sustainable digital economies of scale. Although it's a scary time right now, I remain eternally optimistic about the future of this industry, and I'll tell you when I start firing up the mega DCA machine, because the speed of this crash has led me to believe that lower prices are coming again. I don't want that to freak anybody out, but if you're still here, I assume that you have the stuff that's needed to take it the distance and to get through this bear market. So keep your chin up and understand that these are the championship innings where it gets super hard to pay attention, most people disengage, and that's when the opportunity really arises. So hopefully this channel has been helping you. Hopefully this content helps you. And if that's true, destroy that like button. Remember to comment below. And if you're not already subscribed, we're going to be keeping you up to date with the newest and truest in the entire crypto space throughout the bear market and into the next glorious bull cycle. As always, I'm EllioTrades. You can find me on Twitter at EllioTrades, and I'll see you very soon on the next episode.